Hey everyone, it's Scott here, coming to you from Freedom HQ in Sydney CBD. And I want to share with you what's been going on in the US because there's some big news. The US Federal Reserve has just dropped its official interest rates by a whopping 0.5% in one very dramatic and one very aggressive move. What does this mean for the Australian economy and what is the impact going to be on property prices here? First, let's briefly understand why the US might want to lower their rates. So central banks like the Federal Reserve, they cut rates to stimulate economic growth by making borrowing cheaper, encouraging spending and investment. Now, a US rate cut doesn't just stay within its borders, it sends ripples across the global economy because this is the US. They pretty much have an influence across the whole globe.
The Federal Reserve is the world's largest central bank.
The Fed is important to the global economy in so many different ways. The US is the locomotive of the global economy.
Even though other central bankers often say that they don't follow the Fed, they often implicitly have to.
Now, could this US rate cut influence the Reserve Bank of Australia in its decisions to keep rates where they are or to possibly drop them? Well, there will be increased pressure on the RBA here in Australia to lower the rates to keep Australia internationally and globally competitive because the whole world now is moving to lower interest rates. We've seen Canada drop, New Zealand drop, the UK has dropped, many countries in Europe have dropped, and now we've just seen the US make this really aggressive drop as well. Now, the RBA will still consider domestic factors like our inflation rate and our employment rate here locally, but we do know that our local economy is beginning to slow and it is eroding. So there's some pressure there as well. So it's all going to rest on what happens to the inflation data, which is going to come out towards the end of September in a couple of weeks' time. Also, in a couple of weeks' time, the RBA will meet and actually make a decision on interest rates. It's likely they're going to hold them where they are for now, but there's going to be more pressure on them to actually drop rates in the coming future. Now, in terms of borrowing costs, if Australian banks anticipate a rate cut, mortgage rates could start decreasing now. We've already seen it a little bit in the last month with a lot of the major banks dropping their fixed rates. We could see more fixed rate drops if they suspect that the RBA may drop before Christmas. Now, when the rates do drop, this is going to stimulate demand. There will be more demand for property with very limited supply. This is going to be upward pressure on property prices here in Australia. Now, it could also encourage more foreign investment to Australia, and this may mean more foreign investors buying property here. Now, there are a lot of risks to consider, okay? So rising property prices can further strain affordability, especially for first-time buyers and renters. Increased borrowing might actually lead to higher household debt, posing long-term economic risks, and the global economic uncertainties could create volatile market conditions affecting investor confidence, especially in our share markets. Okay, so what does this mean for you? Home buyers, if you're looking to buy, keep an eye on mortgage rates. They might become more favorable, especially watch the banks extremely carefully on their fixed rates. Investors need to consider what they're going to do if they're investing in terms of currency fluctuations, and also to factor in potential rate cuts and what this will do to where your investments lie, especially if you're in property. In summary, the US did drop by 0.5%. It is a really big move. Interest rates can have a significant implication on the Australian economy and the property market, from our currency strength, export competitiveness to borrowing costs and property prices. So guys, thanks for tuning in. If you found this video insightful and helpful, please give it a thumbs up and share it with others interested in the economy and property market. Don't forget to subscribe to our channel also, and please drop a comment below. I'd love to hear your thoughts and opinions on this latest move coming out of the US. What do you think the impact will be here in Australia?